Hi guys, it's Ian from Signal Centre. Welcome to today's webinar. I'm going to talk about my morning setup. Okay, so basically what I look at every day before I start my trading day. Some of this analysis you can do the night before or even days before really. Weekends are obviously quite good when the markets aren't moving to look at your longer time frame charts, etc. So what I'm going to focus on today is my trigger sheet. I'm going to show you the information that I note down every morning. The basket charts, which I know Joe has discussed previously. I'm going to discuss how I look at them as well. DMARC. So again, this is sort of going back to my trigger sheet. I'm looking for confluence, which we did a webinar on the other day. And it's basically, you know, if I'm looking to sell dollar yen, I want confirmation really that you should be selling euro yen, sterling yen, or at least a decent sort of basket of yen products. It's quite interesting actually. Yesterday, DMARC showed 13 counts on virtually every yen product to sell. We've had a decent move to the downside today, obviously with a move lower in stocks. So that brings me on to that, formulating a bias. So what do I want to be looking at in each of these currency pairs? Obviously, the dollar is extremely important because that gives me a bias on 6 of my FX majors, and then obviously we've got New Zealand dollar standing outside of that as well. So we're formulating a bias. Is the euro bullish? Is the dollar bearish? Is Swiss bullish, bearish, etc.? And then we're looking to combine these factors, give us more chance of getting a winning trade basically. And then timeframes breakdowns, we also did a webinar on that, so I'm going to highlight basically how I come to the conclusion of the calls in the morning. And then of course the call, what am I going to do? What am I looking for? What areas of support and resistance are going to interest me as I go through the trading day? Okay, so as I said, one thing that I do want to share is my trigger sheet, and I thought I had it on my desktop and I've lost it already. Let's just pull this up. So it's only a basic sheet. I mean, what I do every morning as well, or the night before, is that I have this printed out. So I actually write on it manually. So I don't actually write on it on the PC, but we will for this for the good of this webinar, if you like. So here at the start of my trigger sheet, and I only look at currencies, is my basket. So I've got yen, the dollar index, euro, sterling, Swiss, yen, Canadian dollar, Aussie dollar, New Zealand dollar, and then I get into my currency pairs. So this is basically where I start my day, and hopefully over here is where I end my day with obviously my live trade. So I'm looking at the baskets first. So what I'm going to do is I'm going to drag this over. We all use MT4 charts. Find them very reliable. I like the fact that I've got a free screen set up, so I've got a big screen down the bottom and then these two screens up the top, so I can split the charts around and I can look at different things at the same time, which also can be quite important. So here we've got the basket. So this, let's just go to a higher time frame to start with. I'm highlighting previous support and resistance levels with these red lines. As we know, currencies, not just currency pairs, but currencies in general will have a tendency to stop, withdraw, correct at previous highs, previous lows. So that was actually the rally up on the dollar. This is a daily chart, and you can see that we've had quite an aggressive move to the downside. And now we've had this period of consolidation. Now I've got a fib on here, 161.8% fib. So that really should highlight that this last move to the upside, which is 4 days, is corrective with a 261.8% fib down here, and that's also an area of strong support. So really looking at this chart, if I want to get a bias, and I go, just going to break down to the 3-hour chart just so that we can pull it in a bit. It looks like a corrective channel formation. Selling rallies or selling a break really is the bias. So then I go to my trigger sheet, and of course I'll just be writing this on normally. So I'll look at selling rallies in the dollar. I can't spell, really can't spell. So I'd highlight that maybe in red because it's a downward bias, okay. And then I'll work through this trigger sheet to give me my bias, okay, on the basket, not single currencies, but on the basket. Here, I've got previous support. This is the euro. I think that could be a wedge formation. So again, the dollar, I'm looking to sell into rallies. The euro, I'm actually looking at buying into dips. So buy dips in euro. And again, that'll be blue. Okay, and I'm going through these different formations. I'm not going to go through them all right now. Well, I will go through them all, but I'm not going to write them all down on that sheet because I've got them all on this sheet in front of me. So mildly bullish, buying on dips, sterling basket, and I quite like the sterling basket. That looks like a wedge formation to me. So I'll be looking at selling rallies in sterling, which I have been trying to do this morning, not got anything on yet, and then potentially selling a break to the downside. Swiss is opposite to the euro at the moment in the fact that we've got an ending wedge. So again, I want to be buying Swiss. So what's already, I'm looking at buying Swiss, I'm looking at buying euro. So what am I looking to do euro Swiss? Nothing, because they're both the same. I'm both bullish on euro and bullish on Swiss. So I can't really get involved in that pair. But one pair I can get involved in, or two pairs I can get involved in, are the sterling against euro and sterling against Swiss, because I want to be selling sterling and I want to be buying Swiss on dips. So that says to me that I should be logically selling sterling Swiss, okay, because I've got those two conflicting currencies. One's buying, one's selling. I've also want to be buying dips in the euro and I want to be selling sterling. So already in the back of my mind, I should be buying dips in euro sterling. And this is how I'm building this correlation. And basically at the end of doing the baskets, I should have buy dips, sell rallies, or straight buy or sell, or neutral. There are neutral currencies as well, where you just, you're in between support and resistance. There's no decent chart formation. So don't force it. Just leave it. Just ignore that currency for today and move on. And what you basically want to do is you want to find currency pairs that are in the opposite direction. So it might be sterling CAD, a buyer in CAD and a seller in sterling. So that then gives you a bias to sell sterling CAD. Might not be at the market, might be into rallies. And we're formulating a big picture here. We're trying to get a bias, and it's from a bias that you can then sort of stand on the right side, or what I believe to be the right side of the trades. So we go through all of these. Yen, and again, yen, we did see, and this does drop off sometimes, this chart, it likes a higher time frame. I think this is going to build a head and shoulders formation. Now, there's a previous swing high here and a 61.8% fib here. What we did see overnight, we saw it hit this 50% level, then move lower and then go higher again. So yen is still strong, and you get that obviously when the stock markets are moving to the downside. So we're seeing dollar yen push lower, euro yen push lower, Aussie yen push lower. But how long for? Well, I'm going to be watching this level. But when I start to sell yen, I need another currency on the other side that tells me that I should be buying it. Okay, not just any yen pair, if you see what I mean. Dollar CAD, again, really rangy at the moment. Potential to sort of buy dips, more bullish than bearish, put it that way. So sort of buying dips around this level, which is a previous swing low, and we've got some fibs down there, or selling rallies all the way up here. So again, I was saying there's some currency pairs that look like neutral calls. That's definitely not pairs. Some currencies that look like neutral calls, and that is one of those at the moment. Aussie dollar. The long-term picture is to the upside, but we've got a wedge breakout. And remember as well, sort of things are lining up here, because what happens, has a tendency to happen, is that when stock markets sell off, the Australian dollar, New Zealand dollar seem to take the brunt of it compared to other currencies. And then last one, New Zealand dollar, and again, no real take on here. This is a nice buying zone, this sort of fib confluence area to the downside, and a previous swing low. This week I got into a nice Euro New Zealand long position. So I was buying euro and selling New Zealand dollar off this level here, because this was a previous swing high, and that worked out quite well. Only a short-term trade. Well, short-term, it was overnight, but it was only about 10 hours, so it wasn't a keeper. So that's where I sort of get my bias from. And then I want to look at DMARC, and again, I'm looking for a bias. So going back to this sheet, which looks really messy now, because I'm nearly at the end of the day, I've got a column here that shows the DMARCs, okay, which I'll just bring this back up. So I'm looking at DMARC here, okay, DMARC, and I'll take mine off the MT4, and then I'm looking for a bias for these 13s. So if I go to the MT4, okay, and I've got all the different currency pairs lined up along the bottom. I use this first one to sort of mess around with, if you like, and I'm basically clicking through time frames, and I'm looking for 13s. I'm ignoring 9s. Remember what we said in the DMARC webinar 2 days ago, that 9s are more often than not just corrections, and 13s are exhaustion. So I'm looking for 13s, and when I get a 13, i.e. here, that then gives me a mildly bullish bias for euro against dollar, okay? And I calculate the stop. The stop is from the lowest candle in the 13 count, and it's the length of that lowest candle onto the lowest candle. In other words, if you look to here, if I hover over that 13 count, it will say 109.15, 108.74, so that's 40 ticks. So you then take 40 ticks off the low of that price, 108.34, and then the spread, so 108.30. 108.30 is the stop if you were going to take a euro dollar long. Now, going back to our sheet, I'd then put a 13 here. So what time frame is it? Because that's also quite important. So I've got it on the 1 hour time frame. So 13 on a 1 hour, it's bullish, okay? And again, I just do these in different colored pens. I've just got a red pen, so I know which one's bullish and bearish. And so that's given me a bullish bias. Now, if I go up here, and this is just the two currencies that I've looked at up to now, it says that I should be buying dips, and I should be selling rallies in this currency pair, because the dollar and the euro obviously make up euro dollar. So I'm nearly there with these two. Well, the homework I've done up to now is telling me that I should be buying dips, basically. And then, wrong one. Where's the MT4? Okay, you just don't want to be standing on your own. Okay, that might sound, well, you don't want that currency pair to be standing on its own. What I do in the morning is I go through all the different currency pairs. Okay, so I'm highlighting the 13 counts in all the different currency pairs. What have I found here on the 4 hour chart? I found a 13 on the 4 hour. It's within the stop. I know that because I wrote the stop down this morning, which is 87.15. So 87.15 is a stop as far as DMARC is concerned, and we've got down to 87.64. So what does that then tell me? Well, if I go back to my sheet, euro sterling 13.1, it wasn't, it was 4. So 13.4. So as I'm building a bias for this side here, okay, because that's telling me buy euros. This is telling me buy euros. What have we got in euro yen? Annoying. I know I'm not going to get a buy signal in this because it's just falling through the floor. So there's no buy signal in euro yen. There was back there if we want to look at the weekly chart, but your stop is going to be ginormous because it is taken from the lowest candle, which is there, and then the low from that candle. So it's down here somewhere. So I'm not trading huge stops. Don't really like taking the counts on big candle on bigger time frames. If we go to euro Swiss, have I got a 13 count? Yes, I have. It's on a bigger time frame. It's telling me that I can potentially buy dips, but a lot lower. What I have nearly got now is on the 4-hour chart, I've nearly got a 13. And on this chart, I've got a 13, and that stop will still be in place. So again, it's telling me that if I'm doing anything with euro, I should be buying it because the basket is telling me to buy it. All my crosses are telling me to buy it up to now. None of them are telling me to sell it. Let's just have a look out at 2 more crosses. So let's look at these 3. Okay, nearly a 13 count on euro Aussie, so that's got potential to dip buy maybe. Potential head and shoulders, reverse head and shoulders maybe. If we go to this one, okay, we did have 13s at the top, and then we've come lower. Neutral, selling rallies probably, and euro New Zealand. Neutral. So I've basically got up to now, well, that's it really. I've got 3 currency pairs that are highlighting I should be buying euros, and I've really got no currency pairs, which is also important. That tells me that I shouldn't that I should be selling euros. None of them are saying that I should be selling euros. So it's given me that bias. Okay, and then so obviously I'm doing that through the whole sheet. A lot of this you can do the sort of night before. You can not preempt to 13, but obviously if you're going back to these charts here and you've got a 4-hour 11 count, then you can note that down on your pad, 4-hour 11 count on euro dollar, because there's a good, and note the time frame, because there's a good chance when you open up your charts in the morning, you can have a 13 count there. But be careful, don't preempt 13s because they can drop off. Okay, if you get a rally or if the formation breaks, then the 13 will disappear. So it's like everything. Don't preempt a candle. You know, a candle only counts when the candle is closed. Don't preempt 13s. The only thing you can really preempt is, well, you don't really preempt it, but is where a trend line is, because you can tell where that already is. And then, so that's my DMARC. So going back to the this sheet. Okay, I've got my trigger sheet. I've done my basket charts. I've had a look at DMARC. What am I doing next? Well, next I'm going to try and get this off my screen. There you go. Next, I'm going to go to my normal charts. Okay, so let's go to euro dollar. Looks a bit tight there. Let's see if I can drop that off. That's better. So different time frames, time frame breakdowns, which you talked about. I had a webinar on that the other day. This isn't euro dollar. Oh yes, it is. So I mean, look at that for a monthly range. The monthly, weekly, daily, 4 hourly normally, and and then an intraday chart, normally an hour, 45 minutes, something like that. Look at the range that we saw on euro dollar. That's annoying. Get over there. I mean, that's one hell of a doji on a monthly chart, indecision. If we go to this chart, so we're trying to get our bias, sort of already know our bias in the back of our heads at the moment. But it's a bullish outside week, previous support round about here. If we expand it out, let's have a look. Okay, so quite a sort of decent, if you look back over the chart, we've got a decent confluence area here. So if you put a line on here, horizontal line, that's jumped up a bit. So I'm concentrating on these swing lows over here. Look, so it was support, was support, was support, sort of spike through, resistance, resistance, was support, so then becomes support again. So sort of off this time frame, yes, we have seen a decent move to the downside, but we are nearing support. This time frame doesn't really give me anything in the daily chart. Look at these ranges, it's absolutely ginormous really, that gave us that doji style candle. It's not surprising really with what's going on at the moment. And then this chart, what I do sometimes as well is just from the high to the low, just put on this tool. So let's get rid of it. And it's if you can't really see the visual momentum, if you like, trend angle, and then just go for the lowest candle to the highest candle, or the low of the lowest candle to the high of the highest candle, and that gives us a 49-degree rally. Don't start then moving your chart because sometimes the thing changes because of the scaling on the right hand side. Here you go, 50 degrees, you see. So you have to keep it on the same scale and then come down. Wrong one. That's an information line. Okay, so 42. So the rally is stronger than the retracement. Is there anything else that we can sort of see on this time frame? Well, obviously in a downward, some sort of downward channel. Let's put. Okay, so nearing the base of that channel, we can then looking for sort of prime entries. Okay, 108.28. What else? Well, you can't talk back to me, so I'll tell you what else I see. Let's have a look at this. Got 261.8%. Can we fiddle it? Well, there is a 261.8% fib here. I mean, sometimes they go out of line a bit. You could say that's wave 1, wave 2, wave 3, wave 4, and wave 5. So you can count an Elliott wave formation to the upside, a 5-wave count, even though we've got a short 5, which should indicate that the whole move lower is corrective. So again, that's giving us a bit more of a bias because we're looking at our basket, we're looking at our 13s, should we be buying dips, etc. We've got a channel formation. What else can we possibly get out of this time frame? Maybe a little bit more to the downside. An A, B, C, D formation will take us down to here. And then fib retracement. Okay, so it's near this 61.8% pullback level. So prime long entry. You might like to just buy blindly on dips, or you might look for confirmation. Confirmation for me is normally, you know, a decent bullish outside candle in a decent time frame. So scope for a move to the downside, sort of prime long area around here using our bias. And what else can we do from the information that we've been given from these different analytical tools that we've looked at? Well, we can go back to this and we can look for our 13 and we can calculate our 13 count, and we know where to put our stop. Okay, we said before, was it 108? I can't remember what it was, 108.15. So if we go back to this time frame, 108.24 is an ABCD. If you want to put a horizontal line on your chart for where DMARC says we should have 15 count, and then look to the shorter time frames, and this is the only time that I go down to the shorter time frames to try and get triggers. What have we got on the hourly chart? Well, it's just a inside bar at the moment, 45 minutes doji. If we ended up there in the next 45 minutes, which I think we're highly unlikely to do, it would be 4 o'clock. That'd be an easy evening doji, morning doji star formation and a decent reversal candle pattern. And again, just breaking down, and that's about as far as I'll go. There's no real reversal formations as yet. Maybe a little head and shoulders on the shorter time frame, but the bias for me on the euro dollar pair would be to buy into dips off all the information that we've gathered from those different analytical tools, like I was saying. So what you can do, you can just do it for the currency pairs that you watch. If you only watch the FX majors, then just do your bias off those FX majors. What I sometimes find is that you do get that many neutral pairs, if you like, that you then end up having to just use one of the currencies in that neutral pair to give you your bias, and that to me weakens the outlook, if you like, and because of that I have a tendency, and because I have time, because I do this for a living, so I've got plenty of time to go through all those different currency pairs, and once you get used to it, it doesn't take long at all. Okay, I hope you've enjoyed that webinar. I hope you've found that informative, and we'll be back again soon with some more. Okay, many thanks. See you guys.